Welcome back to a brand new episode of Spill the Alpha. You're listening to episode number 31, and this week I'm interviewing David, also known as I Draw Charts on Twitter. David is a longtime trader with over 7 years of experience in the trading space, trading and market making in both the crypto and the TradFi worlds. So as you can imagine, I found this discussion very interesting, and I'm sure that you will too. Some of the topics we discussed include his transition from TradFi trading to the crypto space, the move to full-time trading for a living, the psychological sides of trading, what the market making really is, and much, much more. So let's just jump right into it. I'm your host Delta, you're listening to Spill the Alpha number 31, and please welcome my guest, I Draw Charts.
Well, thank you guys for joining. Thank you, David, for coming on with us. Really appreciate it.
Yeah, thanks for having me, man. I enjoy doing this kind
hopefully.
of stuff. It's fun.
Yeah, that's awesome. And hopefully I'm not going to have any connection issues and no noise because I'm in a pretty busy street. So sometimes we might have some noise from the outside. First, I want to remind everyone, if you want to ask any questions during the space, there's on the bottom right corner, you have a button with like a small chat icon. You can leave any questions to me, David, whatever you have on your mind. And if you are feeling ballsy and you want to just come on the stage towards the end of the episode, you can just request to be a speaker, and we're going to give you the right to join us, and you can just ask anything to us live. So, yeah, we can just jump right into the questions. Well, first of all, David, I want to know a little bit about your background, because I actually don't know about your background at all. But how did you get into crypto?
So I kind of got into crypto pretty much accidentally. So a buddy of mine who was very genuinely like on the spectrum in high school was like trying to explain Bitcoin to me. And I graduated in 2013. So I was a senior in high school. He was trying to explain Bitcoin to me. I didn't get it. It didn't really make much sense to me, but I basically like agreed to install a miner on my computer, basically just to get him to stop bothering me about it. Got a little bit of Bitcoin. This was still way past time when like a CPU miner was any good. But I got a little bit and pretty much forgot about it. But I'd always known that like I wanted to do something involving markets. Like initially, I kind of wanted to be a broker until I learned that the brokers don't actually really, trade. But yeah, so I kind of I spent the next several years basically like working various jobs. I joined the military, Army National Guard.
Nice.
Worked as first job was at McDonald's, then I worked as a server. But basically, just any like money I could scrounge up, I would throw into an account and promptly lose it. So
That's the legendary process, yeah.
yeah, pretty much, yeah. But I wasn't making much, so I didn't lose much. Obviously, it felt like a lot at the time. If you're living more or less paycheck to paycheck and you lose $50, it still sucks. But yeah, I started trying to trade forex. Terrible idea. Don't do that. Unless you hate yourself. Worst market in the world. And eventually kind of settled into equities, and then later like commodities, futures, that sort of thing. Kind of rounded the learning curve, like the learning curve of like, okay, I think I'm making money, and it kind of takes some time to be sure of that. That you're not just encountering variance or randomness or whatever. I've kind of flip flopped back and forth on taking like very long term like swing trade type plays and like as low time frame as I could manage. So, I used to do a lot of market making stuff like that. So I've kind of done both extremes. I've tried my hand at scalping. I'm not very good at it. So I only really do that if I'm really bored. But yeah, come around 2017, crypto starts hitting the news a little bit. I'm like, wait a second, I think I have something to do with that. Went and found my old wallet. It was on an old hard drive in a computer that had gone kaput a few years back, but I still kept it around. And yeah, I had a little bit of Bitcoin, realized it had a market value. Shit was moving. This is back when ICO season was starting up and Binance was still a new thing. This is back in the days of like Cryptopia, shit like that. So, alts are just going, I mean, kind of like meme coin season, like right now that we've had on Solana for the past, I don't know, what, 8 months, however long it's been.
Second quarter of this year, second and third quarters.
Yeah. But at the time, it was like a lot of the markets were a lot more liquid than some of these meme coins are. Because it was getting that big inflow of money from a bunch of VCs were spinning up. They're either spinning out crypto arms or whatever. It just felt like there was a lot more liquidity, and yeah, shit was moving, and I was like, wow, this stuff moves way bigger and like way more predictably than anything I've been trading recently. So I'm just going to move over here, and I've kind of been stuck here ever since.
Yeah.
Originally, kind of lurked around Twitter for a little bit on an old account that I don't even think I have a login to anymore, and then I made this one I think January 2018, and here we are.
Yeah, it's actually interesting that you started trading and became profitable in TradFi before you moved to crypto. Because like most people that I know and that I spoke to do the opposite. Like they start trading crypto, they only trade crypto, become profitable, actually, get an edge and build a system, and then they move to other other assets.
Yeah, I mean, I know a few other people that kind of came from TradFi, but they tend to more be people that like either worked on a trading desk or at some kind of prop firm or something like that. Before kind of most of them kind of go from working for somebody to working independently for themselves. A few will go on and end up spinning up funds or something like that. But yeah, I don't think I know anybody else that kind of did it independently the whole way, starting from forex, but mostly equities into crypto.
Yeah, yeah. Well, I want to talk more about your beginning. How long did it take you to feel like you were starting to get the hang of things and, starting to turn a profit? Was there like a moment where something happened that made you realize that you can do this for a living?
Well, I mean, I kind of always knew it was possible to do it for a living. Yeah, as in, like, I knew that people did this. You know what I mean? So
Mhm.
I've
Did you
always
know
maybe
anyone
had
who's done it, or you just like stories and like stuff like that?
no. I mean, I didn't know anybody personally. But sorry, completely zoned out for a second. But yeah, I mean, like, I just knew that like, it was something that was possible. Like, I knew there were people out there who made a living from trading the market, and I was like, well, I don't see any reason why I couldn't be one of those people.
Mhm.
But I think we all start off thinking like, oh, how hard can it be? It's just green button, red button, right? And then you quickly get slapped in the face, and you're like, oh shit, this doesn't make sense. You can't like update and be like, oh, I messed that trade up because maybe you didn't, maybe you just lost, and it was still a good trade. But kind of making that whole sort of switch to a probabilistic sort of mindset, and learning to like unlearning thinking in like results, like learning how to think critically and not results oriented. That's always a big thing. It took me a little while to kind of figure out that that's what I should be doing, and a little bit longer to be convinced that that's what I was doing, and even longer to kind of again, because at the time I was mostly making swing plays on stocks, which comparatively don't move very fast, and so I didn't have a rapid sort of feedback loop to be able to tell like whether I had an edge or not. But I think the moment for me was I took a play on Shopify, and I think it was like $22, and I wrote it up to 40, and then I got out, and you can actually still go look at that chart today. Like it's since gone up like a gazillion percent since then, but like at 40, I think it topped out around like 44, 45, something like that, and then it just ranged for like a year or something.
Mhm.
And and I pretty much like got that right at the start of the move, and pretty much closed the top of it. And it was thesis driven, where I was like, okay, this company is growing really fast. I'd used their product before because I tried to spin up an e-commerce like side hustle. I actually did that successfully, sold it for $1,200, which is not much, but I hated running it, so I'll call
Yeah,
it a win.
still nice.
I'd used it before. I was like, okay, this is a really easy product to use. I think like it's going to take off. I think people are going to like this. Like they've got a solid revenue model. Like I was just kind of looking into it. I was like, this makes sense. The chart looks good. Fundamentals look good. Like, yeah, I think this is a play that makes absolute sense. I had my risk mapped out, and it was just a really well executed play. And it was the first one that I really felt like, okay, I can confidently attribute this to skill and not just luck.
Mhm.
Because I'd had a few small wins before that, but it was like, okay, am I getting lucky or do I actually know what I'm doing? Because it's hard to tell, again, especially with a slow feedback loop. But that was kind of the first one where I was like, okay, no, like I got this. And now it's just a question of, how long is it going to take me to scale capital until this, can support me for a living?
Yeah.
And yeah, and a little while after that is when I got into crypto and made a bunch of money probably way too quickly, honestly, as I think a lot of people who were around in 2017 did. Most people gave it all back. But because I dabbled with commodities previously, I was actually comfortable on the short side of the market, which some of you may remember, like that was not a thing. Like BitMEX, it had been around for a little while. Like there was access to leverage, but like the vast majority of participants in crypto like had no idea what it was, didn't know how to use it. It was like sort of a black voodoo box of magic that nobody knew how to use. Most people weren't comfortable shorting, but I was. And 2018 was actually just like an incredible year for me, despite it being like wrecking so many people.
Mhm.
Because I like shorted Ethereum pretty much with Cashy Boy. I don't know if he's still around. Some of you might remember that guy. I think like BitMEX listed the Ethereum contract at like 340 and it dropped all the way down to 80. I think I got out at like just over 100. I got it on the rebound, not on the
No,
not on the way
nice.
down. But yeah, so like 2018 ended up being a really good year for me, and then pretty much bottom of the bear market. I think it was June or July in 2018. I had made enough where I was like, okay, I can make a living off this. I can quit my day job, and that's what I did.
Mhm. That's actually a really good skill. It's something that a lot of people don't think about. which is being comfortable with the short side, right? A lot of people are long only type traders, and which I can understand, but I think being like having the skill and developing the skill of being comfortable in shorts is super important, because I feel like not only you're actually able to take shorts and exploit that side of the market, but it just allows you to see the other side of things in a clearer way, right? You're able to identify short setups much better, and they might help you to find invalidations or different type of things to the long side of things. You know what I mean?
Yeah, well, the other thing is, I think you also kind of realize is like, hey, if I can make money when stuff goes down, so can other people. And so now you just kind of like, I think by default, most people kind of have this are naturally inclined, like, well, we all like to see green candles, right?
Yeah.
And I think everybody's naturally inclined to think like, oh, everybody must like, it's better if the price is going up. Or it's like, that's not always true. Sometimes the guy you're playing against, it's way better for him if the price goes down. And because this is a market, odds are that guy's smarter than you, because you kind of have to assume that about everybody. And so it kind of like, yeah, getting comfortable on the short side, I think helps you kind of balance your view of the market a little bit. But also, you just tend to make money faster because, well, not so much in like 2018. Like if you're just shorting from the top to the bottom of a bear market or as close as you can get, obviously, like we spend more time dropping and it doesn't drop as far. There's also less upside when you're shorting, because theoretically prices can go up infinitely. They can only go down 100%. There's some weird compounding stuff that kind of kicks into if you're swing trading short. So I don't necessarily recommend that. But if you're on like somewhat lower time frames, usually the biggest moves tend to like the biggest and fastest moves tend to be to the downside because so much of the market is long biased, and you have people hitting things like stop losses, like liquidations. These things all sort of help moves to the downside be more violent. I mean, you can see this in
Exactly.
TradFi. Volatility spikes not when it's moving up, but when it goes down. So, you might make 10% on a short, but it's only going to take you 6 hours, whereas making 10% on a long on is much more likely to take you, a week, 2 weeks, whatever it is.
Yeah.
So there's kind of that advantage too. Also, there's just an incredibly satisfying feeling about shorting something is dog shit, and then watching the market prove you right. Like it's just, it's a very cathartic feeling. And maybe I'm an asshole, but I really like that.
Yeah. I mean, winning on shorts is really it's fun. I agree with that, because it's like the bulls are always more vocal than the bears, right? So like if you post a long setup, you might have a couple of people saying like, "Oh, I don't know about that," or whatever. But if you post a short setup, you're gonna have a bunch of people saying you're a dumbass. It's going to 100K. It's gonna be the national reserve in the U.S. Blah blah blah. And it's
Dude,
just fun to prove them wrong.
I caught a short on Cardano in 2018, and I was very public about it. I got so much shit, and it just kept dropping like a fucking rock. And I was like, okay,
Oh,
where do
that
y'all
was
go
when it
now? Like,
spiked like crazy during like a couple of weeks, right?
I think it was actually quite a bit after that. I didn't catch that one super early. I caught that more towards the tail end of
Hmm.
the bear market, or of like the major like drops. I think it was in like that like a couple months span where we were just like barely bouncing off 6K or whatever it was.
Oh, okay.
So yeah, so I didn't catch up like that much, but it kept just like it kept like repeating this pattern where it would, like go sideways, rise up a little bit, and then it would drop, and it was just a very, very predictable, repeatable pattern. I think I doubled down on it like 3 times before I managed to close it out. But
Yeah, nice. Well, can you tell us a little bit about any of the significant mistakes or just generally any challenges that you went through in your early days of trading? It doesn't have to be with crypto, obviously, with TradFi as well. And how did you overcome those challenges, and what do you feel like you've learned from them?
I think a lot of my biggest challenges is I'm greedy, and by greedy, I like that can be a very good thing, but it's like if you're smart about being greedy, the most important part is like managing your risk. But I don't think almost anybody thinks about it like that. And I know my default reaction is I want to oversize on everything, and especially on like my swing plays, like I do have a very high strike rate on like my longer term plays. I also tend to give them a lot more wiggle room, but I do know that I also tend to like oversize those. That's always been something that I've done. I've learned to turn that into a strength, but it's definitely bit me in the ass a few times. Like in 2019, for example, I was like very over leveraged. I think like that peak and then where it dropped down again really sharply. I think it was like to from like 12K to 8K or something like that.
Hmm.
I'm actually gonna go look just because. God damn, I must be getting old because it's like I feel like I used to remember all this shit way better. Um, Man, 2019 like doesn't feel like that long ago, but it definitely was.
Yeah, it feels like it was a couple of years ago, but it's almost like 5 years now.
Yeah.
It's crazy.
Yeah, like when we dropped from like 12K to like that 8K level, right before
Hmm.
popping back up to 10K. I was really long going into that, and I'd gotten long around like 96, 97, or something like that. And I just like massively over leveraged on that. And like I did like cut the position, but I think it wiped me for like 30 something percent of my portfolio, which was just fucking stupid, like and I knew better, I'm kicking myself the whole time. Like, why did I do that? I knew not to do that.
So you had your like it took you out in your original invalidation, everything. It's just that you didn't think about the sizing properly, kind of thing, yeah.
Well, that, but also that I was like, I did like I can't remember if I like canceled my stop loss or I just like kept like moving it lower, but it was like, I just didn't even stick to my invalidation. So it was a combination of mistakes where at that
Hmm.
point it was like, I already knew I was profitable. Like I knew what I was doing and I'd ridden that run up or at least a decent chunk of it. Cause I remember literally like screaming at people. I don't know if I can find the post anymore, but I was posting like right at, at that 4,000 level, like right before we
Hmm.
took off, like you need to get long, like this is about to set, and and it did. So I made a ton of
Yeah,
money on that, and I think that might have contributed as well because I'm like, oh my god, I'm invincible, and that's when the market's always going to come back and spank you.
yeah,
Like every time, like if you have a big win, like you should stop trading. Like that's another thing I've learned because
yeah,
you will sort of get this like euphoria or this sort of sense of infallibility after a big win. And it's like you don't want that when
yeah.
you're trying to make decisions. But
It's a really good point because a lot of people say that, after you have a big loss or you take a big L, like take some time off, refresh your mind, come back fresh, and just go back at it. And I feel like you have to say the same thing about having big wins. And I'm not talking about like a big win, like just a day trading big win, like whatever. Like I'm talking about like a huge swing win on some altcoin or even like a 20% day on Bitcoin or something crazy like we had
yeah,
at the
like
trade that
like
you
if I
were
if I
talking
doubled
about.
if I doubled my net worth on a trade in a week and a half, I
Yeah,
should probably take a few days off, and if
exactly.
nothing else, just to recalibrate how I'm thinking about my risk. Because if I'm used to playing with just throw a number out like 100 grand, and then all of a sudden I have a quarter million to play with. It's like when I go to set my stop loss or whatever, or my sizing, I'm still thinking in terms of, oh, I have 100 grand to play with, or it's like, no, I have to
Exactly.
adjust that. The same thing happens if you go from 100 grand to 60 or to 50 or something like that, where it's like if you take a big swing in net worth, if nothing else, like it just takes a little bit of time for you to start thinking about risk and for you to get comfortable with the amount that you're playing with. Because that's a real thing too. Like a lot of people will hit these sort of like mental walls where it's like they're great traders until they hit $1 million. And then it's like nothing's changed. And, they might even not have any liquidity issues, depending on their style and what they're doing. But for some reason, like that's a big round number that I've seen several people like they get to that point and they're like, oh, well, now they're scared to lose it. Right. And so
Oh,
so
definitely.
they start, yeah, so they start making like different trading decisions or like double guessing themselves or and the same thing kind of happens on a loss in the other direction. Like a lot of people will either continue like playing with the same size they had before, not almost like admitting there's like, okay, no, you took a big loss, you need to size down, and I've been guilty of that. Or the other thing is that people, especially this tends to happen more after losing streaks, where you end up losing a decent amount, but not all in one trade. Like if you just lose 10, 12, 15 in a row, which is going to happen if you trade long enough, like that's just statistically it's going to happen. You can have a 70% win rate. You do it long enough, eventually you're going to have a 20 loss streak while still having a 70% win rate. That's just how variance works. But like if you go through those, I think a lot of people tend to like get analysis paralysis where they're like, oh, I keep losing, like everything I
Mhm.
do is wrong. And then they don't have the confidence to pull the trigger, or they'll start undersizing or doing something else like that. So
And
I
then
think
the
like
one you
a
miss,
lot.
the one you decide to not take because you have this paralysis analysis, that's the one that would have worked.
Right, exactly. Or it's like, or you might even get in it, but it's like, oh, but I sized my risk down so small now because I was so afraid of continually losing that, where it should have been, a 10% day on our portfolio turns into a 3% day. And that almost feels just as bad, and it can actually further
Mhm.
shake your confidence where it's like, man, I'm so out of touch. That was such an obvious winner looking back at, kind of goes back to that whole like thinking in results versus thinking about process. Like it's always got to be um sort of a mindset of like, given the information I had at the time I placed this trade, was it a good trade to take? Because the outcome doesn't fucking matter. You don't know what the outcome is. It's like, did I think correctly about whether this is a trade that has good odds, like a positive expected value, you know? And if the answer is yes, and you lost, great. Like you didn't do anything wrong. Losses are part of the game. You're going to lose. You can't get rid of that.
Exactly.
And the other thing is you have to do that on your wins too, because just because you made money doesn't mean it was a good trade. And that's actually, I think, one of the harder things.
Exactly. It's what happens to most people in bull markets. They make a bunch of money because the market is easy and forgiving. And they start thinking, okay, I must be a genius. I can quit my job,
Yep.
become a full-time trader. And then when we get to not even a bear market, but just a ranging environment, people just give back everything they've made, right?
Yep. And then 3 months later, you've given back, the 70% of your portfolio, and you owe like 40% of it in cap gains. And it's like, what the fuck did I do?
Yeah, yeah. And like coming back to talking about the emotional side of things, you have to look at it, in my opinion, as a spectrum, right? And every day you start, well, most of the days you start your day at the neutral state. And, it can go to either extremes. It can be positive, it can be negative. I feel like if you're at any of those, you probably should, take a step back and just wait until you're back to the neutral state of your emotions before you just continue trading and doing other things that should be coming from a neutral perspective, right?
Yeah, I think there's also, and that gets easier with time. I'm not sure it's actually healthy from a personal perspective, but you definitely it's kind of a meme like, oh, I'm dead inside. It's like, no, like that is actual like thing you train into yourself, and it's very beneficial in markets. And I'm not convinced it's a good thing as like a person. But yeah, I mean, like the emotional regulation, I think, is really the hardest part of trading because there are simple moving average strategies that to this day will still work on Bitcoin. Now, horrible sharp, but they are profitable. Like you can give somebody in 5 minutes a strategy that's like, hey, if you do this, you will make money. Might not be a shit ton of money, but it's like, but you'll make something like 5, 10, 15, 20% a year running this incredibly simple moving average crossover strategy. That's something that anybody can do and look at. Like that takes nothing, costs no money. Like you don't need fancy indicators, free trading view account, 2 indicators, and you'll make money. How many people actually do it?
Yeah.
It's like the making the having a system or like that's not actually that hard to do. It's sticking with it, and then also like, hey, what happens when you lose 6 times in a row, 8 times, 10 times, 12 times? Do you start doubting your system, or do you keep taking the losses because you know it's going to eventually come back? That's the part that fucks people over,
Yeah, that's why copying systems doesn't really work because you can't copy the mental state of the person you're taking the system from.
Exactly, and it's yeah, it's like the hard part of trading isn't actually finding an edge; it's sticking to it. Um, and that may sound a little bit odd to people who don't feel like they've found an edge yet. I say people tend to kind of bristle at that. It's not an insult if you haven't found it. Just like it's just that the one like again, simple moving average crossover strategy, 10-day, 20-day. You can go look at it on a chart right now. That is an edge. It's not a great one, but it is an edge. You'll make money, right? But if you go look at that chart, you're also going to see how many times that gave false signals, how many times you would have lost the fucking trade, how much drawdown you would have had to incur. And when you start looking at that, you're like, would I have actually been able to follow this? Oh, probably I wouldn't have. And so it's easy for I think people to start, especially if they're newer and starting off, they're like, oh, well, that's not a good enough source of edge. I've got to go find a better one.
Yeah, yeah,
And
exactly.
and while there are better sources of edge, the main thing they don't realize is like the better edge is not going to save you from the fact that you can't stick to it, that you don't trust it, that you haven't seen it play out, that you haven't trained yourself to do that, right? So I would recommend people start with something shitty like that because as you actually follow it, guess what? That signal doesn't happen very often, like at all. You're gonna wait for months if you're winning, if you're in a trade that's up, you might wait for months, but until you get your next signal to sell. Or you might get a signal, 2 signals a week and keep losing for 6 weeks straight. And in that boredom time, assuming you stick with it, you're still going to be staring at the market. You're still going to start noticing things. You're going to be like, oh, wait, it seems like when this happens, like this other thing happens. Then you go, okay, well, wait, maybe I could trade that. Like, is that something that is actually repeatable? Like, can I find a way to fit risk into this so that it makes sense statistically? And that's how you find edge. It's not something you come in and just analyze and try to figure out. It's not like this magic puzzle. It's like just find something that works, even if it's barely works, and just start doing that. It's gonna be shitty, but guess what? Losing money and constantly hopping strategies is not gonna make you any better. You get better by just trying to do it and paying attention. And if you can start with something that's a simple source of edge that maybe puts you a couple percentage points in the green a year, that's a good fucking starting point, So
Yeah. Also, that's one of the reasons having a couple of accounts and not just one is so good, because you can just separate strategies and you'll be able to focus on, not letting the one thing that's working in the meanwhile affect what you're trying to do on the
absolutely.
other account.
Huge fan of separate accounts for strategies. I probably have like I couldn't even tell you how many accounts, but I know like right now I probably have 6 or 7 accounts that are loaded with like $100 to $200 each. That are purely just for fucking around and trying shit out. Because I'm gonna try like I've got like I have two carry trade strategy accounts. One of them is like a very tried and true boring. It you can think of it as a stable farm essentially. For anybody not familiar with a carry trade, just hold spot, short futures or perps against it, and you'll make the difference in funding or premium depending on whether you're trading perps or futures. It's not a high yield strategy, but it's a good one. It's kind of where I keep spare cash. And then another one is like a much more actively managed, I think it's at like $110 right now, and I'm losing money on it from transaction fees because it's on chain, even on Solana. Like I'm actually losing money because it's very actively managed, but that's not the point. It's just for me to be able to try something out and see how like does this make sense statistically? Because if it does, then I can incorporate it with actual size. But if it doesn't, I learned something, right? I learned it doesn't work, or I learned ways to improve it until it does. And it's just sort of that experimentation, and being able to silo that off and not having to do that from your main account, I think is really really underrated, and I don't think a lot of
Yeah.
people talk about that very much.
100%. I think you should have as many accounts as you can, especially if you're able to actually use them for different things, right? It allows you to, run a certain strategy at one place, and you won't have those trades popping off in front of your eyes, affecting your bias or whatever that is, which is a massive thing, I think, because like some people try to run, like let's say, I don't know, they have a certain idea for a swing trade on Bitcoin, so they short it or whatever, and they're trying to scalp some different altcoin or ETH, and just having that short in front of your eyes, it's going to affect you whether you think it will or won't. It probably will. So
Yep. I know.
so
I can't remember who this was, but a couple of years ago, somebody told me that they actually turn like their monitor into colorblind mode so that they can't see the red or green because like those flashing like little red or green icons. I was like, damn, like that probably does legitimately actually help remove some of the bias.
yeah.
Right. Another thing I was actually talking. I think this is like Cameron Clark. This is on Twitter. Talking about. I think I just responded to him and making a joke, but he was talking about the old tape over the monitor, like
Hmm.
thing, which is an actual thing that like prop traders will do, which is like just tape over the monitor on the section where your P&L shows up. Where it's like
Yeah.
it's not about that. You just keep making the right decisions, and at the end of the day, you see whether you're up or down, and it's like, and that doesn't matter because on
Yeah.
average, if you're following your system and you know it's a good one, you're gonna make money. So who cares if you have a bad day or a good day? Like you just do what you're supposed to do. You show up, you work your job because that's what trading is. And it's just a job that some days pays you a shit ton, and some days you go home and you're a lot poorer. But on
Yeah.
average, you're still just working a job and making a paycheck.
That's what there's two things that I did that really helped me, because with this whole struggle with the mental side of things, using a Silico terminal, you have the option to put just a simplified P&L for type of thing, and it just tells you if you're in profit or at a loss. That's it. Doesn't give you any other information, which I think is a fantastic thing. And the second thing I've done is I changed the colors. I've inverted green and red candles. So like down moves are green and up moves are red, just because normally you're thinking like you see green candles you want to buy, right? Like intuitively that's what you're thinking after watching those screens for so long. So just inverting them helped me. Like doing such a
Yeah,
simple thing, I actually noticed the difference in my P&L curves.
yeah. I mean, that's why I have. If you guys have seen like my charts, that's why I have like a blue background where it's like I don't have green or red, right? It's blue and like transparent, like the Red candles are just transparent and just show the background of the
Yeah.
which is like a navy blue. But it's like, yeah, kind of removing that and making it, first of all, it's just easier to look at, especially if you're staring at it for hours every day. But also kind of just making it making your screen less exciting. Like this isn't, we're not playing a game. I mean, like, and don't get me wrong, some people are here to gamble on meme coins or just gamble in general, and that's cool as long as you're honest about that's what you're doing. But I think most people here are, trying to make money or trying to do this consistently, whether for a career or just, to build a retirement or whatever it is. And you got to take that seriously. It's not supposed to be like, you can have fun just like you can have fun at any job, but treating it as a hobby or as something to do for fun is not conducive to making money, and sort of making it gamified is a good way to, or with the flashy colors or anything like that, like anything that makes it feel more like a game or more removed from I guess like reality or impact is not going to be helpful. So
Yeah, exactly. Well, so for talking about all these struggles, from interacting with people on Twitter, and I know you've been writing blogs for a lot of time, and interacting with people on that side as well, what do you feel like is the most common reoccurring mistake that other people on Twitter are doing, and how would you suggest them to solve it?
I kind of have a couple different groups of people that I think of on Twitter. Like there are traders who I reasonably believe are know what they're doing and have some edge, right? So I'm not going to be talking about like those people. Then there's sort of news, like company accounts, stuff like that. Protocol accounts to keep up with what's going on.
Mhm.
But I think like the average person who's hanging around like that wants to be a trader or is trying to learn. I think the biggest mistake I see people making, it's actually two of them. The first one is, again, the one that I'm prone to still, oversizing, right? And a lot of the time it's driven by somebody who's like, oh, because you'll see something like a meme coin and you'll be like, oh, that went, 100 billion% in, 4 hours. They're like, all I have to do is hit the right one. If I just put $100 into the right one and, I get that return, then, that's it. I'm done, right? That's not trading. That's gambling. And while hoping for moonshots like that can absolutely be a viable trading strategy. I mean, like there's that famous guy. The famous example would be like the guy that just bought every dog coin, like what 2 years ago,
Oh,
and made a
yeah, yeah,
spreadsheet
yeah, I
of it.
remember
Yeah,
that.
like you can spray and pray, and that can absolutely be a very profitable strategy.
Yeah,
But
but
you
he
have to
also
time
did
it
it in a very, he
accordingly.
did
Like
it
if you
very
have a hundred
smart. Like
dollars
he did it in a different, like in a separate, in a very good time for it. He noticed there's a trend, so it's not like he just opened Pump.Fun randomly and just started buying stuff, right?
Right. Or it's like, well, and even the pumped out fun stuff, I think a lot of people, there are sort of theses behind this, where it's like, oh, this one's cute, this one's funny, this one's a political meme coin, and it's topical to what's going on in the world. So people are thinking about it. They're not just like mindlessly clicking on stuff usually. But I think a lot of people come in and they're like, oh, I have $500, like I'm gonna put $100 into this meme coin because if it goes, because people are thinking of the upside. They're like, yeah, if it goes, like if it pulls a Bowden or a Pepe or something like that, yeah, you're set for life. Great, but the odds of that happening are not in your favor. Not in your favor enough to justify betting 20% of your portfolio on it. Like 1%? Absolutely. They're like, wait, I should only put $5 into this? Like, yes, that's correct. Because, if it goes 100x, you still doubled your fucking portfolio. That's a great trade. And yeah, it's not going to retire you. It's not going to make you wealthy. Yeah, you're probably going to hate yourself because like, what if I dumped all 500 and I would have had so, yeah, you're going to have that sort of regret. But so many people I think in like are so worried about having that regret or that or of missing something that is statistically unlikely to happen, by the way, that they tend to over risk.
Hmm.
So that's the first thing. And the other thing is, especially with a small account, you're like, oh, if let's say you're starting with $500, like, yeah, $500, it really isn't that much, or like I'm only risking 100 on it. But they're not thinking in terms of their portfolio size, right? Which is what you have to be thinking of. Like you're not thinking, like, everything in trading is about percentages. None of it is about like the number you have. The only time that's a concern is when you get big enough where you're looking for liquidity, right? But in every other case, you have to think purely in terms of percentages. And so whether I have $10 million and I'm risking 1% of that, or whether I have $100 and I'm risking 1% of that, the size of the portfolio doesn't really matter that much if I'm trading optimally on a strategy that I know is not going to, like, that is profitable and is not going, like, I'm not exposing myself to unacceptable levels of drawdown. And again, I still struggle with this to this day. Like, for example, right now, I think I'm somewhere around like 2.6 times my entire portfolio leveraged long on Solana. Now I have a lower entry than where we are right now. I am still managing my risk, but those P&L swings are something, you know.
Yeah.
And that's a level of risk that I'm comfortable with. Mathematically, it's probably not ideal. No, probably it's not. But so
Well, you're
I'm
in
not.
profit. That's all that matters for now.
I am in profit, but again, like we're not results oriented. Like it's still got to be like, am I making a good decision, right?
Yeah.
Like that's all it comes down to. Because the trade could go south just as well, and you kind of have to think of it in that term first. Like it doesn't matter whether I'm up or down. What matters is whether I made a smart decision in getting into the position, in placing my stop loss,
Hmm.
in adding to, subtracting, whatever I do. Like every decision I make, is that a good decision? That's all that matters.
Yeah.
So I think sizing is one of the big mistakes I think a lot of newer people make. And then the second mistake I think is not knowing when to get out of, right? Where there again, it kind of plays into greed, where it's like, oh, but it went up, and it's like it could keep going up more. But I think a lot of people enter a trade without a plan ahead of time on when or why they'll be exiting,
Hmm.
right? And your reasoning could be anything. Like a lot of my plays are sort of fundamentals driven, or thesis driven, but I always make sure I have a metric where I'm like, okay, I have this reason that I got into the trade, right? Like I think this coin is a competitor to this other coin, and I think it's going to catch up, right? But then if that's my thesis, and then the coin I got in does catch up and I don't get out of the trade, well, now I have to think about, okay, like why am I still in this? Why am I still holding it? My thesis doesn't apply anymore because it did the thing that I was expecting it to do that would make me money. Now I'm just kind of sitting here holding it for why, you know? So having that sort of a target, whether it's a target relative to another coin, whether it's just a set price target because there's a resistance level there, or whether it's something like I might watch like community engagement metrics on a meme coin, right? Like okay, as soon as the number of holders stops going up or plateaus for more than something like an hour, I need to get out, right? But always having that metric where it's like I know as before I even enter the trade where and why I'm going to get out, where or why, right? Sometimes it'll be
Hmm.
the same thing, but having that threshold prevents you from round tripping, which is I think a bigger problem trying to get started out than a lot of people might initially assume.
Definitely. I feel like it's one of the hard. I think it's much harder to find exits than to find entries, and that's why so many people round trip.
Yeah,
Not only because it's just generally really hard to find exits, especially when things are up so much if you have a really good entry, but also because you just become so drunk from the P&L, and with all those massive P&L swings where every single 1% up move is 100 times than what you would have made in a year.
right. Well, I was saying, because then we start talking about all the other things we were talking about earlier, where it's like, okay, the greed kicks in, but then also the despair kicks in, because it's like, okay,
Yeah,
if I turned $1,000 into $1 million in a day, there's no way I'm mentally prepared to handle that.
exactly,
Like
exactly.
there's no way. Like, and then like, so you go from euphoria because holy shit, I just woke up and my $1,000 position is $1 million, and then it drops 5%, and holy shit, I just lost 50 grand.
Exactly.
You know what I mean? Like you're just not mentally prepared for that. So it's like having those sort of plans is absolutely necessary. I think for the other thing is like a lot of times in crypto, those big wins, they tend to be it's price discovery, right? So you don't even have the benefit of looking at prior, like, oh, there's a resistance here on the past chart, I'll sell here, right? Because there's just no price history there, which I think is also plays a big role that a lot of people don't really talk about. But yeah, like assuming when you're planning a trade, like assuming that the trade plays out or does well, like if you don't have a plan to get back out of it, you're in danger of like losing
Mhm.
everything you just made.
Yeah,
So
and and that's
you
why
don't
it's
want to
so
be there.
good to plan it before you even enter the trade, because you're sober, you're focused, you're actually thinking clearly, which is probably the best time to set all those things out.
Yep. Say a little thing that I do, and this isn't optimal. And again, this is just something you can almost think of as copy paste. But I played some meme coins. I'm not really in any right now, but I did it like earlier when they were really popping off. And just my rule of thumb was like, okay, I'm gonna sell a third on a double, and then I'm gonna sell half when it doubles again, and then I'll just like ride the rest, and it'll probably go to zero. But if it gets up there, I've guaranteed that I've made some money. And obviously assuming like it hits the first those first two doubles, which side note, that's a ridiculous statement to make in any market besides crypto. It's like, yeah,
Yeah.
you just wait till it doubles and then it doubles again, man. Yeah, but like meme coins, we're talking like, okay, you threw like $200 in this thing. It's like, okay, when it gets to $400, you take out you take out what is that, like 166 or something like that, and then it doubles again, and you take out half of what you got, and you just let the rest ride, and you made a nice little tidy chunk, nothing too crazy. And the rest can go up, can go to zero. Then you're completely free on what you're gonna do with it, right? I usually just kind of let those sit. So
Yeah.
far, the only one that really like hit was that ended up turning into more after having done that, like significantly more, was Bowden, right? Because I think I put like $50 into it, and by the time I pulled out like what was remaining, this is after I already sold the third and then the half.
Hmm.
I pulled the rest of it out for like $9,000, right?
Yeah. It's
Which,
amazing.
so like that's the biggest, I think, percentage win I've ever gotten from anything. But I mean, which wasn't, I mean, compared to the rest of my portfolio, that's not a lot. But again, I risked $50, and it was one of the first meme coins I played, and yeah, I kind of went like, damn, like why didn't I just go full size risk into that? Because normally I'd put like a couple $100 into something. But again, I still made a good decision because again, I hadn't really played meme coins before, and I wanted to kind of dip my feet. I got lucky on the first one. And again, given the information I had, it was still a good trade. It was still good decision making. So yeah, kind of after doing so, it's just kind of have to find a way to like review your process, your thoughts, what you did, and again, would you make the same decision again? If so, why or why not? And then take that and adjust for next time.
Yeah, yeah, those are really good points. Oh, I want to talk a little bit about your trading strategies. How do you feel like they've developed over time? Do you feel like nowadays you use, different tools or different methodologies overall, or did you just, update and upgrade the ones you've had in the past, and etc.?
Funny story. I kind of went two opposite directions with this. First of all, I tried to learn I love reading. I read really fast. I remember things pretty well. I try to emulate a sponge, right? If there's information out there, I want it. Doesn't even have to be used. Doesn't have to be good. Turns out, first of all, nobody in crypto reads docs. Tons of alpha in documentation. And there's even more on GitHub if you know how to read code and then go look for stuff. And because you get a sense for like, okay, this is actually good tech, or this is going to work, or this isn't going to work, or all this different stuff. And I, again, like in equities and stuff, I kind of did more of the fundamental side, and then combine that with trend following, which I got better at while trying to trade commodities. Um, and that was most of what like 2017 was, because let's be honest, 2017 everybody was talking about fundamentals. There were no fucking fundamentals.
Yeah,
Dead Bitcoin was $17 billion or whatever, for Christ's sake.
it's
You know,
hilarious that
the,
people nowadays don't even know the story of Dentacoin.
dude, I remember I bought Campus Coin, which is a coin for college students on Cryptopia, and I don't even remember how it did, but I just remember, goddamn, Cryptopia sucked. Um, but yeah, you youngsters wouldn't know shit about that. Some people, but shit. What was I talking about?
We're talking about strategies and how you like to like read docs and stuff like that.
Yeah, so that's I've kind of stuck with that. But originally, I tried to combine that with a ton of TA. So I had like RSI, Ichimoku clouds, moving averages, different variations of moving average ribbons, whole way, like all this different stuff, because I thought an indicator was going to be what would make me a good trader. From that perspective, I've pretty much cut all that. I don't have indicators on my chart, like pretty much at all. I don't really use indicators of any sort, at least not regularly. The only thing I ever use them for is if I have a specific question where I'm like, oh, I wonder, like what the average price this has been trading at in this range is. Okay, well, let me put a WMA on. Oh, okay, that's where it is. Okay, cool. Take it off, right? That's all indicators are for me at this point, where it's like, oh, I have a question. It's like, oh, like every indicator is made up of price, time, and volume. That's it. It's just the same three different points of data, just rearranged and displayed in a way that makes sense to you, and that answers whatever question you have in your head. If you're relying on an indicator for signals, you're probably going to have a bad time, or at least it's less than ideal, right? I know I was talking about like a moving average strategy before. Really, the only reason that works is because it's momentum, and momentum begets momentum, right? When something starts moving in a direction, it's much more likely to continue doing that than it is to stop. That's all a moving average strategy is. It's just a visual representation of that, right? And the reason you get chopped around following them so much is because a lot of times there just isn't any momentum, but the moving average doesn't know how to tell you that.
Mhm.
Um,
Not only
so
that,
it's
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 also a
not.
lot of time people don't even know what their indicators are doing, right? Like people,
Yeah,
it's like
correct.
watching people talk about
If you can't
RSI.
tell me if you couldn't tell me how to do the math equation for your indicator, you probably shouldn't be using it, because it's not really very useful.
Yeah. It's like when you see
So
people talking about RSI and like talking about it in total nonsense way.
Yeah. So it's like so a lot of my at least my charting strategy, and this is a large part of the reason why I don't really post charts anymore, even though my username is iDrawCharts, is just because I don't have anything on them. Right. I'm kind of just looking at, okay, what's the market doing? Is it looking like it wants to go up or down? Is it making higher highs, higher lows? Okay, cool, we're trending. Is it making like roughly equal highs and lows? Cool, we're ranging. And I might throw a support or resistance line on there. But again, those are basically just notes to me for later. Like, oh, I already identified this. Now I don't have to go zoom back all the way back over there and go figure out where it is again. Like that's the only thing I put on my charts, and honestly, I think most of the time that's pretty fucking boring, and so I don't really post them that much anymore. I mean, like I can post nowadays. I mostly just post text where it's like, oh, I got long this, and I can post a chart. I can attach a chart, but it's just going to be a picture of a blank chart that just shows the price, and like that's all I'm really looking at. But on the opposite side of things, I also, again, because I'm just very curious, back when I was trading on BitMEX in 2018 and more in 2019, I deployed with the military in 2019 to Kuwait and then didn't have anything to do once I wasn't working.
Oh, that's awesome.
I was a
Yeah, I was in
helicopter
the military
pilot.
as well, man.
Okay, cool.
Yeah, dude.
So yeah, I'll ask some questions about that later. But but yeah, so I was busy for most of the day, but then when I wasn't, I had a ton of downtime, and so I just started looking through. I was trading on BitMEX, and I started noticing that there didn't seem like prices were quite moving the way they should be. Like relative altcoins to each other, right? And they had these weird contracts where, oh fuck, let's see if I can remember exactly how it worked. It was like each contract of an altcoin was some quantity of the altcoin in USD, but you paid in Bitcoin or something like that. So the prices like moved weird. And I noticed that when I was comparing, I think it was Cardano again, like and how it moved and was priced versus how it was priced on Binance. I was like, wait, this isn't like it's not like notably off, but it was off enough that I started picking up on it. I was like, okay, there's something here. And then I figured, like, I didn't even know that like the contract pricing was calculated previous to this. So I was like, okay, well, this is really fucking weird, and it fucked with my head for a while. I don't know if they still do it this way. It's been forever since I traded on BitMEX, but if they're still doing it, I highly recommend going back and looking at their docs because it will fuck your bread for a minute.
BitMEX docs generally are filled with so much good information. It's just
Oh
insane.
yeah, for real. Seriously, like that's actual alpha. Like the BitMEX docs still to this day, go read through every page.
Yeah.
If nothing else, you'll learn a lot just about how markets work in general. But yeah, you'll definitely learn
Yeah,
some shit
dude, their
you
YouTube
haven't picked up
channel
on.
has a couple of lectures with Arthur talking about just general trading and stuff like that. They have some of the best information you can learn
Yeah.
about just general markets and general trading.
Yep. Like I said, docs are an underrated source of alpha, man. And especially whatever exchange you trade on, you should read the docs. I guarantee you, if you look closely enough, you'll find something in there that'll point you to something that is exploitable. And there may be people like already doing it, but usually there's still plenty of edge left.
Yeah.
I remember like I found a whole bunch of stuff on FTX that way, which FTX made everybody feel like a genius trader when it turns out like Alameda just actually really sucked at trading. But there's still a shit ton of ways you could make money on there. One of the easiest ones was like they had all those altcoin baskets that would rebalance. You knew exactly what they were going to hold at and exactly when they were going to rebuy. And there's like 6 different plays you can make with that. You can either front run it or you can like just arbitrage the basket against the component prices. All sorts of stuff. Either like it would have an impact on the funding rates for the alts, all sorts of stuff. Yeah, so docs hugely underrated source of alpha. But yeah, so on my charts, I kind of went the direction of like less is more, and then at the same time, like that, like getting into the BitMEX docs, I started like researching like, oh well, like even though these things are like priced weird and the contract size is weird and all that, I was like, they're still not quite moving how I would expect. And so I ended up trying to figure out how to do like a triangle arb between like the Binance price of an alt, the BitMEX price of an alt, and the price of Bitcoin. Because if any of those three things changed, the price of the contract on BitMEX would change. I didn't know. I knew a little bit about coding. I'd never really coded anything serious before that. And I quickly realized, like, okay, I'm not going to be able to do like to take advantage of any of this manually. Like, I'm going to have to like buckle down and actually try to learn to code. But that kind of started my journey into more just like mechanical trading. And I never actually did get the triangle orb strategy running because again, like I had to learn how to code, and that took quite a while. I still suck at it. I still really don't like writing code. I really enjoy reading it, which is kind of weird.
Yeah, I'm with you on that.
But yeah, that kind of kickstarted me on quant style trading. Eventually, yeah, I started doing some basis trades. Like that's super easy. You can put those on manually. Then started looking into, oh, what does a market maker do? And then I started going, oh, like, oh, okay, BitMEX has like these really oddly large tick sizes. Like, is that exploitable against other exchanges? Turns out, yes, it is. Like and then you start going into like, oh wait, I kind of figure out there are some cheats and tricks about run the BitMEX liquidation engine, like where some people could get orders through and some people couldn't. There's a couple ways you could find out that would make you much more likely to be one of the people that could. If you were running it through the API, there were different like servers you could hit, and different flags on your orders and stuff like that. So just kind of like just trying to absorb new information kind of just gradually led me to more and more technical style trading, and eventually I worked with Trading Peter. Some of you may know him. He helped build some of my very very first market making systems, which were complete shit. Not that's not his fault. That like this was completely at my design. Like he did a fantastic job. I just didn't know very much at the time. And then I ended up building out some more systems for myself as well. I was working on a much more complex one right before FTX went down. And yeah, I lost pretty much everything on that. And I haven't
Right,
really been back to
you're gonna get
mechanical
most of
trading
it
since
back,
then.
or
I'm actually not, just because of the way I was corporately structured, I think. Still undetermined because I was not a normal customer account.
I see.
I was a BVI incorporation under like Delaware LLC, and and basically I'm lumped in with a bunch of like the VCs and stuff as far as order of who's getting credit back. But yeah, good lesson on don't try to complicate shit for yourself. Either way, like I mean, I'm doing great now, and definitely learned a lot and kind of stuff. But that's life, and you keep going. So
Yeah, I feel like simplicity is almost always the best thing you can do. Like people tend to overcomplicate things so much, it's just crazy. But I feel like, and I've said this before in this show, that almost every trader goes through this process of like starting with very simple price action, very basic things. Then you just start adding things on top of it again and again and again, and you have just like a clusterfuck of things going on in your chart, and then you just start removing them and reducing it to a very very small number of things that you're actually watching at the same time, going back to like the basic, right?
yeah.
Yeah.
I think I think especially if you're trading manually, that's definitely the case. Even like mechanical style trading, I found this as well. Like if I try to add in other features where I'm like, oh, let me combine some of these systems, so I think it'll be more efficient. It usually doesn't work that way. Like it might work that way hypothetically, but then you start running into it's like, oh, I'm taking way too long to get all the different data inputs I need, and I actually end up executing slower, which means I lost my edge. Or hey, because I'm relying on this one data feed that has way higher latency spikes. Now my system just doesn't fucking do anything, right? Or the more you start to add, the more you kind of realize it's better to have a lot of really simple things all separated from each other, kind of like those trading accounts we were talking about, than it is to try to make an amalgamated mess of code and spaghetti on your chart and all this other shit. That yeah, like simplicity really really does tend to be better. And I know sometimes I talk about stuff that sounds like super overly technical. I promise it's not as scary as it sounds. And like you don't need a PhD. I barely have a high school degree. Never went to college. I'm effectively dumb as fuck. And you don't need to be like you don't need to be a genius to do this. You just have to be disciplined, consistent, and think critically about things. And that doesn't mean you have to think fast. You just have to think well. So
Yeah, it's a really good point. Well, you mentioned market making. I want to transition to that. I know that you're a market maker, which means you're the one who's always taking my stop losses, right?
yeah, sure.
So
We'll say that. Yeah.
yeah, so I'm sure a lot of people still don't really, well, a lot of people don't know what market making is, and they really do actually believe it's like some bad entity after people's money. Like, just I remember seeing some guy replying to you like, "Bro, you don't even know what market making is. They're the bad people," and you're like, "I'm a market maker, you dumb fuck."
Yeah. It
Well,
really is
so
funny.
yeah, so I just want you to tell us a little bit about what market making really is, and if how did you get into it? Well, you already mentioned that, but if you do think other people also should be looking into that.
I think everybody should try it manually just for like 10, 20 minutes, half an hour, whatever, just so you get an idea of what goes on. It's going to be very inefficient. That's actually how I started though, was just like point and clicking. market making, and I had like hotkey macros and stuff I set up just using auto hotkey. But it wasn't like I didn't have to code anything initially. Again, not the most efficient way to do it, but it can be done. All market making is just placing limit orders. Like you're never taking liquidity off the well, unless you're really losing money, and it's like an emergency. Oh shit! But I better close all my positions button. That's the only time you're ever taking a market order, which means that's the only time you're ever moving price at all. So 99.99999% of the time, you're not moving price. In fact, you want price to stay as still as possible, within while there's still people buying and selling. Because all market making is you place a limit order, let's say at $100 to buy, and then you place a limit order simultaneously at $101 to sell. And all you want, the whole way you make money is when price bounces between those two. So somebody sells to you for $100, and then you sell it back to somebody else at $101. Limit orders all the way. That's all market making is. You don't want price to move. And the way that makes money is like obviously because price just doesn't bounce around in one place for forever. The alpha in market making is primarily just being able to manage risk. Like the 99.9% of all the alpha in market making is just figuring out how to manage the risk of what happens when, price goes to $100 and then it goes to 99 and then to 90 and then 75. Because anybody can just place those limit orders like between 100 and 101 and you'll make some money. Like price will go between $100 and $101 maybe one time, maybe 50 times, maybe 1,000 times, but eventually it is going to move somewhere else, right? And so what do you do when it moves somewhere else, and how do you work your inventory when that happens? That's figuring that out is how you make money as a market maker. But the market maker doesn't have an incentive to move or push price because they're trying to make the spread, right? They're not trying to move price to a different point. There are people that will hunt stops, and I've done that before too, but not as a market maker. That's a completely separate strategy. That's where I'm like, oh, I saw somebody take this position at this point, and statistically, I have an idea of what the average leverage on this exchange is, right? So I know like these are the points at which he's most likely to be liquidated, or I can look at okay, there's a place where I would logically place my stop here. I can maybe spend 10 grand, push the price up, make him buy another 300 grand, get my short filled because he's forced to buy into my limit short that I've placed, and then I think price will drop after that, right? So there are strategies where people do push price around and try and run stops and shit like that. If you're trading less than $10,000 on a position, this is not something you ever have to worry about. Like on a liquid exchange, it's just not. Like if you're trading $500 on your position is not worth hunting. Like it will actively lose somebody money to do that. If you're trading big size, it can be sometimes, especially if you're blatantly obvious about it. So that does happen. But that's not what market makers do. Market makers want price stability. They want an active market, but a stable market.
Mhm. So how should someone approach trying market making if they want to like learn a little bit about it, about just how to trade it, how to do it?
Go to the 1 minute chart. Ideally, choose a time when it looks like it's kind of ranging. Place a limit order at the bottom of the range. Place a limit order at the top of the range. Congratulations, you're market making.
Mm.
Now, figure out how you're going to handle that when you don't have a stop loss, because I mean, like you can choose to implement a stop loss, but now figure out okay, when it moves out of that range, do I want to continue buying more, right? Because theoretically, if I have an idea of where the value of the actual asset is, which is it's going to float around to some degree, the further that asset goes away from the fair value or like from the midpoint price, the better of a deal it is, right? It got cheaper, so I want to buy more, and then I want to mean revert it back to where I believe fair value to be. So you end up getting into like statistical modeling and stuff like that, but it's I can kind of walk you through it, but really you just start doing it. Just start placing limit orders. Maybe place three, like one at $100, one at 99, and one at 98 in our example, and then on the opposite side, one at 101, 102, and 103. And then and again, do this with very small size, but then figure out okay, how would I protect myself when this price moves? And you'll see it happen. Like it'll happen. You'll be in the red, and you're like, okay, how do I handle this? Do I double down? Is there a price point at which I should just cut this? Do I base that on price? Do I base that on volatility? How wide apart should those orders be? Maybe it should be at 100 and $100.50, right? Because I'm not getting hit enough. You start like just very quickly seeing sort of the problems and the challenges with market making, and it's going to lead you to a path of kind of figuring out like, oh, okay, I have a rough idea of at least what problems these guys are trying to solve and how they might try to operate and fix them and what they're trying to do, right? You don't necessarily have to make money market making, but I do recommend everybody try it for an hour or two or some amount of time until you feel like you've got a hang of at least the general idea of what they're trying to do and what's going on. Because it is a good like learning experience, I think. And then if it's something that you get really fascinated by, as I did, then yeah, dive into it. Start figuring out what are your risk parameters going to be, what's your sizing, how many orders you're going to place, how many spreads you're going to target per minute, per second, stuff like that. It's just kind of like a learning and discovery process. But I mean, this is sort of a meme between like at least the quant people that I talk with on Twitter, where it's like just test and prod. Like if you think something might work or you're not sure how it works or whatever, just take a small amount of money and fucking try it. Assume you're going to lose that money, so don't like take a lot. Just go try it. That's the best way you're going to learn. Go click buttons, or if you're at the point where you're automating stuff, just run a simple or set up a simple system you think might work, or at least will teach you something. Let it run. Just go look. Like you don't need these fancy back tests. You don't need anything crazy like that. Just let the strategy run, see what happens, and then tweak it, adjust, and do it again, and do it again. And eventually, you either decide that the whole idea was shit to begin with, or you'll find a way to make money. And like those are the only two outcomes you can get to. But you just gotta you gotta keep playing with it, like keep clicking.
Yeah, I fully agree. I think testing and prod is the best thing you can do with every single trading strategy, trading idea, edge, whatever it is. It's always going to teach you the most and give you the best feedback when you're actually testing and prod and actually trading it.
100%. Yep.
Yeah.
I mean, it was like again, like that system, like trading Peter wheel for me. Like it kind of worked. It worked really well. Again, like, and this is market making in a nutshell. It worked really, really well most of the time. And then when it didn't, I had huge problems with it. And so I was like, okay, well now I have things I got to fix. And so you just iterate from there. And I'm like, okay, I need to update my risk parameters because mostly I was just relying on like initially I was basically just martingaling and then an emergency stop loss. Turns out that's not really I mean like it'll work for a while and then when it doesn't you're fucked. So then you got to figure out a way to a different approach. Or like okay, well now I need a different way to unload inventory, different risk parameters. But yeah, just test stuff, find problems, solve them. That's it.
Yeah. Well, before we move on, I want to remind everyone if you have any questions, you can click on the bottom right corner and leave them right there, and we're going to touch them in a couple of minutes. Or you can just request to be a speaker, and we're going to let you in. And yeah, back to you, David. It was a fantastic point. I feel like it really is something everyone should explore, and I feel like it's one of those things where some people think, oh, I'm probably not going to do that, so I'm just not even going to try it. But I've done it for quite some time. Just eventually even trying like grid bots and things like that, which today are fully automated by the exchange even.
Yep. As I say, but my
And
first strategy was very, very similar to a grid bot. There were a couple of
yeah,
things added in, but that was basically what it was. That's where it
yeah.
started.
And it's I feel like it's one of those things where even if you won't make a lot of money out of it, if any, you're gonna learn a lot. And you will most likely learn a couple of things that will improve your other edges that are not even related to market making and stuff like that.
Yeah, that's the fun part that I've always liked about trading. Like it's not it's a creative process. It really is. And the creative process isn't in executing your trades because that's the most boring part. Like if you're doing it right,
Yeah.
it's boring as fuck. You're just doing the same thing a million times in a row. Or the closest to the same thing you can get. But the creative and fun part about it is exploring, trying different shit, figuring out what works and what doesn't, and like, oh, now I have to figure out like my ping time to this server. And then, oh, but okay, but now the exchange latency spiked over here, but it's like, wait, but maybe there's another server now. I have to build this infrastructure. Oh, that didn't work, or there's all these different things that you never even think to like you'll never even think about until you just run it again. It's like go find problems because there's a million of them. Like go try something until you run into a problem. Then try to fix the problem. Eventually, you'll either hit a point where you're making money, or you learn that what you're doing was a dumb idea and you find out why. Either way, that's a win and it's fun.
Yeah, exactly. Well, I want to transition away from trading now. You've recently had a very hard accident while riding on one of those electric scooters. Well, I'm happy you're doing better, first of all. But it was a pretty close call, correct me if I'm wrong. Do you feel like it changed you somehow, or like changed the view of yours about things? And like, what was the whole experience like? I know it's a weird question. It's just that I don't know. I thought
Yeah,
it's probably worth talking about that.
yeah. So I mean, for those who don't know, I was run over by a car while I was riding an electric scooter. This is a electric scooter that I own. It's very fast, goes up to 75 miles an hour, and
That's
so
insane.
so it is.
That's insane, dude.
It is. I really enjoy it. I'm a speed demon. Like I like going fast. I like skydiving. I like driving fast cars. Like anything that gets me going fast. I don't know. I'm an adrenaline junkie. But because it goes so fast, and again because I owned it, I was wearing like full motorcycle helmet, motorcycle riding gloves, and the helmet absolutely saved my life. I still have a dent in my head, actually, which would have been 3 inches into my skull
That's
if I hadn't been
insane.
wearing that. So if you're ever on a motor vehicle, wear your fucking helmet. I don't care how dumb you feel like it is. It can and will save your life if you ever get into one of those accidents. And if you do shit like I do, eventually you're going to. So yeah, first and foremost, wear a helmet, kids. But yeah, basically a lady turned into me. I was on her left. She was on the right. She tried to make a left-hand turn through my lane. I basically impacted the driver's side mirror, flipped over the hood of the car, rolled underneath the car, was kind of tossed and turned a little bit. Broke 14 ribs, 6 pelvic fractures, collapsed lung, torn scapula, and broken collarbone, among other things. Quite painful. Very easily could have not survived that. Fortunately, I'm back to pretty much full. I think my shoulder will probably be deformed for the rest of my life, which is fine. But other than that, I think I'm pretty much pretty close to back to 100%. Just waiting on doctor's approval to get back in the gym.
Yeah.
And then while I was in the hospital, unfortunately, my mom passed away, and it did kind of make me think a little bit about mortality and stuff. Which was actually a kind of good thing because in the sense that like I kind of looked back and I was like, you know what, I don't really have regrets in life. I was like, don't get me wrong, like I've done plenty of stuff that like was stupid or there was bad decisions, but I learned from them and they made me the person I am today. And I'm proud of who I am and the trajectory that my life is on for as long as it lasts. And that was kind of a very calming realization to come to. And the other thing is, it just made me very grateful. Like get out of the hospital, everything, like all the colors look brighter. Obviously nothing's changed, but it's just like no, just like appreciate being here more and being able to experience good things and bad things in life. Like it all. I choose to think that it all means something because I decided it does. So yeah, in that way, it's kind of been cool.
Yeah. Well, it was probably an insane experience. I mean, especially like, just like going through the recovery and like everything, with your mother. It sounds really hard. So we're sorry to hear about all of that, obviously. And good to have you on here, man.
Thank you.
It could have ended much in a different way, that's for sure.
Yeah, I mean, I very easily
Yeah.
could have not been here today, and I'm glad I can. And thanks for having me on
Yeah.
to ramble about
Are
markets
you
and imaginary internet money.
are you done with scooters?
Absolutely not. No, I'm getting the fuck back on it. No, it's I say 'cause we're still in the process of like we're about to file a lawsuit against the lady who hit me. And I don't know if like they'll need the scooter as evidence, so I haven't gotten it from police custody yet. But as soon as I can, I'm getting back on it. Just need to order a new helmet because my old one got
Yeah.
shredded.
Well, we can move on to the last question. I wanted to ask you, what do you think making it is, and do you feel like you've made it?
To me, honestly, I think okay, so I mean, for context, like I've made millions of dollars, I've lost millions of dollars. I don't have millions of dollars at the moment, but I know that I will again, in the somewhat near future. Again, because I've perfected my trading systems and I know what I'm doing. It's like that's gonna come eventually. I don't think, at least to me, making it. I always thought making it was gonna be about money, right? And then I made a bunch of money and I never spent any of it. Literally, never did. I lived off of like less than 100 grand a year. Um, I've never spent more than 100 grand in a single year, and at one point I was a multimillionaire. And like it's a very it's a very comfortable life, but it's like, but at least for me, it was never really, I thought it would be about money, and then I got the money, and then it wasn't, that didn't make me happy. Um, and I know it's a very cliche thing to say, money doesn't buy happiness. And it's like, I think it can, like money definitely buys the absence of unhappiness in some ways. There's a lot of
Yeah.
problems that can be fixed with money for sure, but it doesn't actually make you happy. So I think making it is just is just being happy, being content in your life, in your work, in your relationships, and having a sense of purpose. I think that's what making it is, and I don't think it's necessarily a monetary thing. Although I do think it's a lot easier to discover and sort of embark on that journey of figuring out like what will make you happy and what will give you that sense of purpose. I do think that is much better started off from a place of having a lot of money. So absolutely, get rich, then figure out how to be happy. I think Naval Ravikant maybe said something along the same lines at one point. But it's like it really is. It's like get rich so that you can figure out how to be happy. You're not necessarily going to be happy because you get rich, But you know, if you can make a bunch of money, you then have the freedom to explore, have the freedom to figure out what actually will make you happy. And I think once you're on the path to doing that, I think that's what making it is, honestly. But you can also do that without
Yeah,
having made a bunch of money.
it's a really good. That's a really good way of putting it. I think that's one of the best I've heard because money will never bring you happiness. And every time I see people that are like thinking that's the case and trying to hustle their way into millions because they feel like they will be happy once they have them,
Yeah.
I just pity them because I know what they're going to feel once they reach that.
Yeah.
Right.
Well, I mean, it's one of those things.
Um.
I hope everybody gets the chance to experience it. Like, I would love to see everybody rich,
Yeah.
and who knows? Like money might actually might genuinely make some people happy. I just know it doesn't make me happy. Like in and of
Hmm.
itself. And yeah, that's not to again, that's not to like downplay the importance of money and definitely like making if you're living paycheck to paycheck, like somebody saying like money can't buy happiness is almost a slap in the face. Because at one point I was living out in my car and I was like, bitch, like trust me, money would it doesn't matter. It's like I'm just miserable right now. It's like I don't care if it makes me happy. It would like get rid of so much unhappiness, and it's like there's no downplaying that. You can't dismiss that because it's very
Yeah.
real.
That's a good point. That it won't make you happy on its own, but it will probably get rid of all the unhappiness you have in your life, or most of
Yeah,
it.
it'll definitely cut down a whole lot of it. So yeah, and again, like it the same. Yeah, like trying to tell people like, oh, money won't make you happy to somebody who's like a large source of their unhappiness is coming from a lack of money. It's like it feels very asinine. And I've been there, and I don't want to. So I don't want to say that. But yeah, I mean, I think making it is getting to the point in life, whether it's from money or not, getting to the point in life where you're able to start figuring out what actually makes you happy. And yeah, I think that's best done from a position of I have a lot of money because now I can just go do whatever the fuck I want and to figure out what it is that I actually do want. And that's a process. So
Yeah, that's a good point, man. Thanks for sharing.
yeah.
Well, we can before we end the things, let's go over the questions. We have Magical Johnson asking, is running a bunch of grid bots on the same pair considered market making?
On the same period, actually, I can.
On the same pair.
Oh, on the same pair. I mean, yeah, like that's like technically market making. There's a reason they call them maker orders, right? Maker orders are limit orders. Anytime you place a single limit order, technically you are participating in some kind of market making. But I mean, like yeah, like that. I would consider that market making. I will tell you, like you're going to run into a bunch of issues where it'll make money 99% of the time, and then it'll get blown the fuck out. I know because I've done that and I've tried it. Grid bot by itself is not going to give you alpha. Like I said, in market making, the alpha is actually being able to manage your risk because you're guaranteed to make a slow trickle of money. Like that's going to happen. It's just a question of what happens when all of a sudden your P&L swings massively against you because that's going to happen as well. But yeah, grid bots are actually absolutely like a form of market making. I think most places that like you can do this automatically don't run very tight grids or don't let you like place orders super close together, and typically you're going to want that. So and I don't know, I haven't looked at them in probably a couple of years, so I could be completely off by now. But yeah, I mean, like
Yeah.
it definitely like counts as market making, I think, and I think as long as you're trying to, you don't necessarily have to. I kind of believe this like about a lot of things actually, where it's like you don't have to be like rich or have made it financially to call yourself a trader. Like, is it something you do? Is it something you put effort and time and thought into? Then that's what you are, right? So, and the
Hmm.
same thing with market making. Like the same thing, like you don't have to be a concert pianist to call yourself a musician. Like you could be fucking horrible and just playing for your own enjoyment, and that's fine. You're still a musician. That applies to anything. So worrying about what because it essentially comes down to like worrying about what other people are going to say or what other people are going to label you as. Fuck that. Like who cares? Like, are you doing the thing? It doesn't matter whether you're doing it well, whether you're doing it poorly. It's like you don't have to qualify whatever you're doing based on what somebody else might think about it or be like, oh, you're not a real insert whatever. Fuck them. Who cares?
Yeah, spot on. We have Crypto Miller asking, which indicators or main criteria do you usually look and use for the short strategy? You mentioned shorting Cardano in the past, so would you short Cardano after the Voltaire update? Would this be a criteria?
I haven't kept up with Cardano in a while, so I don't know what the Volterra update is. Um, so the reason I shorted it in the past was, first of all, like the chart patterns were so much cleaner back in the day, honestly. And you can go back and look at like 2017, 2018, 2019. They just were. The market was a lot less sophisticated. It's gotten a lot harder. I've been saying it for a few years. I was like, you actually have to get good now. It used to be easy money. Easy money days are kind of over. You can still gamble on meme coins, like you still make a lot of money on accident. But the days of like shotgunning and stuff and just everything pumping at 10,000%, that's not coming back. The days of like every like bull flag breaking out to the upside, with no fake outs, that used to be a thing. Now and then they started being like, okay, it always gets faked out, and then you're like, okay, now everybody sees the pattern of it always gets faked out, so you play it accordingly, and then the market evolves and sees like, okay, now the market now it always faked out, so we're actually so it's not always going to play out even after the fake out. And you had patterns like the BART back in like 2018, 2019. And you have all these sort of things that the market evolves. It gets a lot tougher and more competitive. But the original reason I shorted Cardano is just a really, really simple TA. It would like range around like in a very flat range, and it would spike up by to a size that was about double whatever the range width was. It would spike up and like double that distance. So if the range was I don't know, like 8 sats, it would spike another 8 sats past the top of the range, and then it would drop afterwards. So I just shorted it on that because it's like it kept happening. It was a repeatable pattern. It's not anymore, but it was just a pattern that I noticed. And that's what a lot of the trading is, where it's like you just spot a pattern, and that pattern might be as simple as a moving cross average. It might be something like what I just described, or it might be something like, oh, I noticed like every time I see this behavior in an order book, like that this thing follows, right? Or that anytime funding dips below this level for this many consecutive days, like I'm statistically likely to make money along. Like these are all just patterns. It's just pattern identification, and they can be any one of a billion different things, right? But so it's not so much about indicators. I don't really use indicators too much. One pattern that's never going to go away is uptrends are made of higher highs and higher lows. Downtrends are made of lower highs and lower lows. You might occasionally get some fake outs, but that's been the case in markets since the history of markets, and maybe someday that'll change, but I don't think it will. That's a very basic pattern, and it's just stuff like that I look at. It's just trying to find stuff that has happened enough times before that I have a reasonable expectation that will happen again. Like that it's more likely to happen again to make me enough. It's likely enough to happen again that it'll make me more money than the likelihood of me losing will cost me money. That's all you're looking for. It's just pattern recognition.
Yeah, brilliant. Well, we don't have any more questions. If anyone wants to hop on the stage real quick to ask any questions, you can request right now, and I'm gonna let you on. But I guess everyone is too shy.
I don't bite unless you ask me to, but
Well, let's give it a couple more seconds. Well, I guess no one is gonna hop on. People are afraid
fair enough.
to
Hey, what's up,
be
Devon?
in your presence, David.
I see a couple people here now. I see Soup. I see Boycope. Charles. I see Devon is down here too. Lex
Yeah,
Luthor.
Bible
I say,
Lex.
dude, honestly, shout out to Lex, because Lex every like couple months he will like I'll just get like a 50 like to say like Lex has liked 50 of your posts, and it's always from like years ago, like of old like alpha or stuff I thought was alpha. Some of it's actually not, where it's like I thought I knew something and then it ended up it's either not applicable anymore, or I just had completely the wrong read on it at the time. But shout out to Lex for like that level of research, and because I know he doesn't just do it to me. And so
That's
yeah,
awesome.
so no, that dude goes deep on the learning. So
Yeah, we have also Boy Cope asking a couple of questions, like how did you start trading and stuff like that. But we already went over all the questions you're asking, Boy Cope, so you can just listen to the recording that's going to be uploaded a second after this space is over, and you can just hear everything right there. So don't worry about it. All right, well, I think that's pretty much it. Unless you have anything else you want to add, David.
wear your helmet, don't do drugs, or do, I don't care. Eat your veggies. I don't, but yeah, I don't know.
Oh, that's brilliant. Well, to everyone who joined in the middle of the space or is just joining right now, there will be a recording available at the moment that this space ends. And on Monday, as always, I'm going to be posting notes from the space. So if you're too lazy to listen to the recording, you can just check that out. David, huge thank you for coming on the show. I wanted to do this for a very long time. I feel like everyone probably learned a lot from this one. So yeah, man, I really appreciate it. Thank you. Good to have you, man. Good to see you're feeling better, and hopefully you're not going to be riding at 75 miles an hour on a fucking scooter.
I will. The accident happened at 30 or like 25 to 30 miles an hour, so it wasn't even the speed of driving.
Yeah.
But I'll be back on in no time. Really appreciate you having me. This has been fun, man.
Yeah, it was a pleasure, man. All right, well, make sure to check David's profile. He shares a lot of good memes and a lot of shit posting nowadays, but I'm sure one day there will be a little bit more info about charts. And I'm sure that if you go back at his timeline, you'll find a lot of gold.
Well, I was gonna say, I even
So you can
posted a
see
chart
that
like a couple weeks ago. It's crazy.
Yeah, but give him a follow. A very good friend of mine. Should be a very good friend of yours as well. And yeah, thank you to all of the listeners for joining. I do want to mention IDEX Live is IDEX, the new net is going to be launching in really soon. Actually, I'm not sure exactly when, but it will be launching really, really soon. If you want to know more about that, check IDEX profile, join the Discord. There will be a lot of information on there. There's probably going to be a bunch of different contests and stuff like that. We just finished our trading competition, giving away about 2.5 million IDEX tokens. Who knows? Maybe there's going to be more. So stay tuned for that. Yeah, that's pretty much it. Thank you guys for coming. David, again, thank you very, very much. Notes on Monday. Recording will be available in a couple of